All right. I typically don't do stock analysis, and that's because this is a trading show, and I like to do trades, and I like just the stocks that I do, and I've already done analysis on them, deep dives into them. But this one is interesting because this one has fooled a lot of people, and it is in the news a lot. It's on the trading shows, it's on Twitter, it's everywhere. And even today, this morning, the guys at TV Live went long off the open at 15.24, I believe. Sean went long at 15.24, and it closed the day at 14.99. So I don't know how many shares he's done, but he took a back on that one. I don't know when he got out, but the intraday was pretty low. So I'm going to take a look at this one. Palantir. It's probably a name you guys know, a name you guys hate to love or love to hate. One of the two. There seems to be no in between. Check out this 52-week range, which this is a problem. $5.84 and $20 is the 52-week range. Volume, huge volume. 81 million. Crazy volume. The average volumes is only 60 million. So this is far and away more than their average volume. And the reason why it was down 8% today is because this downgrade from Morgan Stanley. It was, I want to say it was up 15% in the last couple of days, and then it got downgraded. But here's what's weird is Morgan Stanley downgraded it, but then raised the price target. I don't know why they do that. I got to do a little more research into that. I don't know why. You would think they would lower the price target if it's downgraded, but whatever. Palantir is a software company, and it doesn't do them justice to say it's a software company. It's actually an AI software company, and they do deep dives into data. Deep dives into data, and mostly for government agencies and intel agencies and the DoD, stuff like that. But they also do other countries. And they did go out and start using their products on companies, which everybody thinks that's where the money is. But let's take a look here. Price target is average price target is 13.71, but the low is $5. The high is $25. And so there's a wide range there. That is a concern. You don't want to mess with stocks that, but I do believe in Palantir, and I'll show you my holdings here in a second. Let's look at their fundamentals. Fundamentals, they are a huge company. Well, they're not that huge. They have a $35 billion market cap, and they have 2 billion shares outstanding. Their revenue is about 2 billion a year, which means that's a 16 times price to earnings ratio. They just went positive in their revenue, or in their net profits. I want to say 2 quarters ago, but then they dipped back under. Here's their operating margins and their net profit and their earnings before taxes and depreciation. Here's a return on assets. So it's hovering around even, which for a growth company is pretty good. If you look at some of the other growth companies, like some of the EV startups, or some of the other companies that just went public the last couple years, they're not even close to these numbers. So Palantir went they went public a couple years after they were already established, which a lot of companies don't do. A lot of companies want to go public real quick to get that cash, get their money back out, put it all in the investors, and that's a real big no-no. But if you look at their earnings here, it's hit or miss on their earnings, but they're treading water here, which like I said is still good as where they are at in their companies history. Here is what people look at. Here's what the bulls hang their hat on. And this is their revenue from 2021 to 2023. It's almost doubled in the last 2 years. Their revenue has almost doubled. And these are not just revenue from individual customers. These are revenue from huge government contracts and contracts, long contracts with corporations and AI contracts looking into the future. So these are only going to get bigger. They're only going to get better, and that's what the bulls look at. Let's take a look at mine. I was a early investor back when they went public. I'm in at 23.18. These are averages. I think my lowest cost basis is 5. My total cost basis I have is almost 16,000. I have a 710 shares with the average cost basis of $22. And the current value is only 10,000. This is after the 8% drop. So I am in it, and I am a bag holder. But like I said, I do believe in their mission, and here's why the Bears. Here's the Bears argument. The Bears argument is, one, they don't know how to run a company. That's one of the Bears arguments. Is they're IT guys and they're bad at running companies. And one of the ways you can see that is for bonuses, they give a lot of stock to their employees. Employees don't necessarily like stock. Some employees do, some of the smart employees do, the ones that are going to be rich like the stock. A lot of the lower level employees, they just want the money. So you create an immediate sell population. So these people are constantly selling the stock, which only pushes it down. Anytime there's a pop, you got employees selling shares because they want to buy a car, they want to buy a mortgage, or they want to pay for college, or whatever the case may be. So that is one of the big, huge problems with Palantir, is the massive sell basis. And another thing is they don't have the massive buy base. And the reason why they don't have the massive buy base is because it's only, I want to say 30% ownership by insiders, or not by insiders, by institutions, which that's a problem because institutions have to constantly buy because they're constantly getting inflows. Here's the institutional ownership. Now, with this low institutional ownership and a high employee ownership, you're going to have massive sells. And that's part of the problem with Palantir. I am still a believer in Palantir, and I'm still going to start pick up shares. But like I said, I already have 15,000, almost 16,000 invested in them, 700 shares. I want to maybe get to this to 1,000. But this is a very small piece of my portfolio, and the reason is because this is super high risk growth. This is one of the better ones to be in terms of super high risk growth, but it is still that category, and I have to treat it as such, 0.5%, 1% of my portfolio, and that's about it. So that's Palantir. That's a little bit of the controversy and the tug of war between the Bears and the Bulls, and a little bit of my perspective on Palantir.